I think if you take a subset of the overall loan markets, I would agree with Justin. The overall loan markets have really shown a decline. But if you take a subset of just the leveraged buyouts, acquisitions, and dividend recaps, that actually recovered from 2015 levels. And if you, to Pankaj's point, I think if you take out the effect of China, because China grew by 50% from 2014 to 2015, and then by another 40% this year. The year is not yet done. If you take that out, then I think, for example, South Asia was relatively flat was down from 2014 and then flat from 2015. So it's still hasn't really recovered. Southeast Asia has recovered, but it's flattered by one or two very large transactions, like the Big C acquisition by Burley Euchre. So if you take a step back, the acquisition markets have shown a bit of a recovery from 2015, but then again, this part of the loan market is only 10 to 11% of the total volume. It cannot in any way move the needle. So I think we're really looking at a very uncertain sort of horizon for acquisitions. I think there will be a lot of smart money sitting on the sidelines waiting for the volatility to die down. So this recovery that I'm talking about may be quite short-lived, actually.
M&A activity in certain sectors from certain countries is up, but in the region generally it's down, right? So China is a bright spot. If you take China out of the M&A or Chinese sponsors or Chinese strategic companies acquiring in Asia or globally, then M&A activity in Asia is down abysmally, right? If you take the Chinese out. So the other part is the currency volatility. I mean, there have been fair amount of events, Brexit, this, that, I mean, which have caused fair amount of volatility, which has caused people to slow down, take a review, take a check of their investment cycle. That has resulted in the lower volumes. The other thing is pricing is down, right? And that's leading to more refinancing activity rather than new money activity. So even though there may be volumes, the general feel is much lower because you're not seeing new names or new deals into the market. It's the same old guys coming at 20 bips cheaper, 30 bips cheaper, 10-20% cheaper than what they were 2 years, 3 years back. So it's a combination of these things, but there are certain bright spots. For example, the Chinese sponsors or companies acquiring, whether they are financed by Chinese banks only or other foreign banks or regional banks is a separate question, but at least the bank market is seeing some of that volume. May not be the banks on this table or some of the other banks that we may want to be involved in, but at least there's a fair bit of activity on that side.